The dual band trading system. It is composed of dual bands which are independent, cooperating, auto-adjustable in volatility, time and chart periodicity. One of the bands is of shorter and one of longer time span. The dual band system enhances the direct comparison of the shorter and longer price trends, giving the trader freedom to analyze and trade one trend, or two, or multiple trends simultaneously. The interaction between the price and the bands of the dual band trading system results in specific chart pattern combinations that can help to identify trends and make calculated forecasts of future price movements. The dual band expert automatically identifies these chart patterns and notifies the user for their meaning. We will see more about the dual band expert later. Let's talk about the dual band trading system's chart patterns. They are called the 1-2-3 and 3-2-1 patterns, and there are 8 in total. We can see the full list of the 1-2-3 and 3-2-1 patterns and their interpretation on this table. They can be very bullish, bullish, bullish neutral, neutral, very bearish, bearish and bearish neutral. Out of the 8 patterns, 4 are especially important. The first one is the 1-2-3 pattern, which is bullish. For this to be formed, the securities price, which is represented by the number 1, must be above the shorter in length band, represented by the number 2, and that 1 must be above the longer in length band, represented by the number 3. Now this is a bullish pattern since today's price is higher than the short to medium term band, which is an indication of short to medium term strength, and that band is higher than the medium to long term band, which, in turn, is an indication of medium to long term strength. Thus, the security that forms a 1-2-3 pattern is a security with strong short, medium and long term momentum. The exact opposite pattern is the 3-2-1, which is a bearish one. For that to be formed, the securities price, 1, must be below the shorter in length band, 2, and that 1 must be below the longer in length band, 3. The 1-2-3 pattern is even more bullish when the securities price and both bands are in an upward slope. When this is the case, it is called the 1-2-3 up pattern. In the exact opposite way, when a 3-2-1 pattern is formed and the securities price and both bands are in a downward slope, we call it a 3-2-1 down pattern. Now let's see some examples of the rest of the patterns. The next one is the 2-1-3 pattern, which is neutral. Remember, the securities price is represented by the number 1, the shorter band by the number 2, and the longer band by the number 3. Now, this pattern is neutral because it is consisted by one bullish and one bearish element, with the bullish one being that the short band is above the longer one, and the bearish that price is below the short band. The next pattern is the 3-1-2, which is bearish neutral. That is because it is consisted of 2 bearish elements and 1 bullish one. The bearish elements are that both price and the shorter band are below the longer one, which points to medium to long-term negative momentum, and the bullish element is that the price is above the shorter band, which shows short-term positive momentum. The next pattern is the 1-3-2, which is bullish neutral. The next, and final pattern, is the 2-3-1, which is neutral. To start using the dual band trading system, the user can apply the dual band trading system's template to any chart. The template's main window includes the short-term band, the long-term band, the automatically drawn support lines, like this one and that one, the automatically drawn resistance lines, like this small one here, and this past resistance line that turned to a support one after being breached by the price. It also includes the nearer support and resistance lines, which are automatically detected and drawn, and can be used for both target and stop-loss purposes. Finally, the main window of the dual band trading system's template includes the extreme demand, or price inflation alert symbols, and the extreme supply or price deflation alert symbols. The upper window of the template plots the maximum profit-loss calculator. You can learn more about the calculator by visiting the Maximum Profit-Loss Calculator lesson. The dual band trading system's expert automatically identifies and interprets the 1, 2, 3 and 3, 2, 1 patterns. The dual band trading system's exploration scans securities looking for those forming the 1, 2, 3 and 3, 2, 1 chart patterns. This exploration works with data of any periodicity. So do the 1, 2, 3 and 3, 2, 1 chart patterns. The zoom in, zoom out trading technique. Now that we have learned the basics of the dual band system, let's have a look at the zoom in, zoom out trading technique, and use in our examples the 1, 2, 3, 3, 2, 1 chart patterns. Some traders like to zoom into a chart and look for immediate profits by making decisions without previous planning, while others like to zoom out so they can place price movements in context and exploit larger trends. The best traders can zoom in to examine smaller trends, take advantage of emerging opportunities and respond to developing risks, and zoom out to evaluate the importance and validity of a trend, to spot the general direction and benefit best from both small and big trends. The best investors don't divide their trades into situational or strategic, and emotional or contextual, neither do they choose between short-term or long-term trading, but they embrace the concept that all trends are interconnected, and that it's better to trade across a continuum of trends, by zooming in and out when needed. Let's look at an example. On this chart of Standard & Poor's ETF, called SPY, the 1, 2, 3 pattern has been formed. Also, both the securities price and the shorter band have flattened, and a resistance from the recent top is tested, at levels where an extreme demand or potential price inflation alert was signaled. So what strategy shall we follow? Is this an established upward long-term trend, or a new trend in the making? And, has the uptrend run its course, or there is more life in it? By zooming out to the weekly chart we see that an even stronger bullish pattern has been formed, the 1, 2, 3 up pattern. This is an indication that the bullish trend is very well established. By zooming out to a monthly chart, we spot two very bullish, 1, 2, 3 up patterns. The first was formed between 2012 and 2015, and the second is formed from the late 2016 to now. We also see that an extreme demand alert is given for the first time in years. So this is a very strong and mature bull cycle, where prices might not be cheap anymore, but where there is no sign of an immediate reversal. Now, if we zoom back into the daily chart, it's easier to assume that the current flattening of the securities price and of the shorter band do not imply a long-term demand shortage, neither a long-term trend weakening, but they rather indicate a normal digestive phase of the recent strong profits. Still, since the bull market is very mature and there has been some short-term momentum loss, our best bet should be to follow a bullish, medium-term strategy. The high-low trading system is composed of a band derived from the highs and lows of an asset's price, of the price position indicator, and the median. The high-low trading system is composed of a band derived from the highs and lows of an asset's price, of the price position indicator, and the medium, short and very short-term performance lines. The interaction between them and between the asset's price produces the system's main and secondary up and down signals. The high-low expert automatically identifies these signals and notifies the user for their meaning. We will see more about the high-low expert later. Let's note that the price position indicator shows where the current closing price of an asset is positioned in relation to its price range over a period of time. Thus, a value of 100% for a 50-period time range indicates that the asset's current price is positioned at the highest point of the security's 50-period price range. The high-low trading system's template includes 1. A band derived from the highs and lows of an asset's price, 2. The price position indicator, 3. The medium, short, and very short-term performance lines, 4. The maximum profit and loss calculator, 5. The automated support and resistance lines and trend lines, and 6. The extreme demand supply or inflated-deflated price alerts. Decision-making is enhanced by the interaction between all indicators and tools used. Let's talk about the high-low trading system's signals. We can see the full list of them on this table. They are divided into main and secondary, and into up, down, and neutral ones. A main up signal is produced when the price position indicator crosses above 20, and the price crosses above the higher line of the high-low band. This is an indication of an early uptrend. A main down signal is produced when the price position indicator crosses below 80 and the asset's price crosses below the lower line of the high-low band. This is an indication that a mature uptrend is ending and a new downtrend is beginning. The second main up signal is produced when the price position indicator crosses above 50 and the asset's price crosses above the higher line of the high-low band. This is an indication of an uptrend expanding. The second main down signal is produced when the price position indicator crosses below 50 and the asset's price crosses below the lower line of the high-low band. This is an indication of a downtrend expanding. A neutral signal is produced when the price position indicator is below 20 and the asset's price crosses above the higher line of the high-low band. A neutral signal is also produced when the price position indicator is above 80 and the asset's price crosses below the lower line of the high-low band. A secondary up signal is produced when the price position indicator crosses above 20 and the asset's price do not cross above the higher line of the high-low band. A secondary up signal is also produced when the price position indicator is above 80 and the asset's price crosses above the lower line of the high-low band. Another secondary up signal is produced when any of the performance lines is above 0 and the asset's price cross above the lower line of the high-low band. All signals are shown on this table and are produced by the interaction between the asset's price, the price position indicator, and the medium, short and very short-term performance lines. To start using the high-low trading system, the user can apply the high-low trading system's template to any chart. The high-low trading system expert automatically identifies and interprets all of the system's patterns. The high-low trading system's exploration scans securities looking for those forming the system's patterns. Let's talk about 5 of the most innovative and useful basic features of DomiStock Pro. 1. The auto-drawn support and resistance lines and trend lines. DomiStock automatically plots all important support and resistance levels and support and resistance trend lines on any chart, intraday, daily, weekly, monthly. 2. The nearest support and resistance levels auto-detect tool. At any given time, there might be several important support and resistance levels, but only 2 can be closer to the security's price. Those 2 levels are crucial for entry and exit signals and stop-loss orders. DomiStock draws on chart these 2, nearest to the security's price, support and resistance levels, to better assist the trader to recognize and take advantage of them. The nearer support, resistance levels are drawn on daily, intraday, weekly and monthly charts. 3. The maximum profit and loss calculator and the resultant direction. An estimation of the potential profit or loss you may obtain from trading a specific security over a period of time can be a valuable information. The maximum profit and loss calculator calculates, in percentage points, the probable maximum profit and loss of the security under consideration over a chosen period and up to 250 periods. In addition, it calculates, in percentage points, the resultant direction of the maximum supply and demand forces applied on the security. As a rule of thumb, when a trade is favorable, then the value of the maximum potential profit is positive and greater than the absolute value of the maximum potential loss. In this case, the resultant direction returns a positive value. The further above zero the resultant direction is, the greater the chances for the trade in the specific horizon to be profitable. The maximum profit-loss calculator helps to both estimate the potential profit or loss you may obtain from trading a specific security over a period of time and works equally well as a risk calculator and a price forecaster. 4. The extreme demand supply or inflated-deflated price alerts. DomiStock automatically recognizes extreme demand supply or inflated-deflated prices and rates them from 3, for the most inflated, to -3, for the most deflated. These alerts are drawn above and below the price bars. 5. Forecasting matrix charting the resultant direction of 3 or 4 different max profit, loss calculator periods, constructs a forecasting matrix that provides the probable future path of the security of interest in percentage points. In the following example, the forecasting matrix foresees a breakout in the Dow Jones Index the short-term 1-5 periods and a flattening of the price curve in the intermediate. The dominant and hedging trading system is composed of the dominant and hedging signal system and the price position indicator. The interaction between them produces the system's signals. It is important to notice that the dominant and hedging signal system can work as an autonomous signal-producing system. However, this is not how it's used here. Still, before moving forward, let's talk a bit about it. According to Cambridge Dictionary, hedge is a way of 1. Protecting, 2. Controlling, or 3. Limiting something, and when trading we need to protect our investment and our profits, control our position and limit our risk. Thus, hedging works like an insurance. To hedge a long position when prices move higher is like buying an insurance against a price fall. This doesn't mean that prices will fall, but if they do so and the hedge was proper enough, then the impact on your portfolio will be reduced. The dominant and hedging signal system can produce 2 simultaneous signals, one for the main position and one for the hedging position when needed. Hence, a distinction is made between a dominant and a hedging signal and a dominant and a hedging trend. The dominant trend is the main trend that a trader should follow to obtain a profit. The hedging trend is a minor trend that challenges the dominant one and threatens to reverse it, and is the one that a trader can follow to hedge his main position. The dominant signals help the trader to properly time the market and by applying the zoom-in, zoom-out technique to easily spot the overall trend. The hedging signals help the trader to properly hedge his open positions. In financial markets, hedging is usually made by investing in 2 securities with negative correlations. However, any trading action that reduces the risk of a loss from a current position in the event of a trend reversal is important. Hence, the hedging signals can be used to help open and close a hedging position or as profit-taking or position-reducing alert, or even as reminder to the trader to be extra cautious. On the following chart, the dominant trend is upward and is intact for 18 periods, and the hedging trend is downward and is intact for 2. Notice, however, that today's dominant trend was initiated 18 periods ago, as an upward hedge alert to a downward dominant signal. On the next chart, the 18-period dominant signal is cancelled, and the 2-period hedging trend has turned to a 3-period hedging trend. Hence, if a trader was holding a long position for 18 periods and took advantage of the hedging signals to get some kind of protection on the 17th or 18th day of the rally, his losses would have been reduced. Now let's see some of the most important signals and their interpretation through some examples. When the price position indicator is below 20 and there is an up dominant trend, then a signal for an uptrend's early stage is produced. This signal is stronger if there is an up dominant trend and the price position indicator crosses above 20. In the same way, when the price position indicator is above 80 or crosses below 80 and there is a down dominant trend, that is a signal of an early downtrend. You can see the full list of the main dominant and hedging trading systems signals on this table. The dominant and hedging trading systems signals recognize and interpret all phases of an uptrend and of a downtrend, from deflation, to the early upward stage, to growth, maturity, inflation and early downward stage. The dominant and hedging trading systems expert automatically identifies and interprets all of the system's signals and patterns. The dominant and hedging trading systems scans securities looking for those forming the system's patterns. DomiStock's technical rating system is an evaluation of the technical status and outlook of a prospective financial instrument, based on the analysis of its price and volume information, through the use of quantitative, statistical, computational and technical analysis models. This is the first ever rating system of financial securities and products, based on their price and volume action and not on fundamental data. DomiStock's technical rating system symbols and their meaning are as follows. An AA rating means that the security has a positive status, with a positive outlook, while an AB rating means that the security has a positive status, with a stable outlook, and an AC rating means that the security has a positive status, with a negative outlook. A BA rating means that the security has a neutral status, with a positive outlook, while a BB rating means that the security has a neutral status, with a stable outlook, and a BC rating means that the security has a neutral status, with a negative outlook. A CA rating means that the security has a negative status, with a positive outlook, while a CB rating means that the security has a negative status, with a stable outlook, and a CC rating means that the security has a negative status, with a negative outlook. DomiStock's technical rating systems template includes the technical ratings ribbon, the hybrid dominant and hedging signal system, the price position indicator, the maximum profit-loss calculator, the 50-period price high-low range, the automatically drawn support and resistance lines and trend lines, the nearer support and resistance lines, which are also automatically detected and drawn, and can be used both for target and stop-loss purposes, and the extreme demand, or price inflation alert symbols. The hybrid dominant and hedging signal system is based on an innovative formula that makes it able to provide short, medium and long-term signals according to the underlying forces of demand and supply. At the same time, it recognizes all hedging trends, allowing for the trader to hold a position for as long as needed in order to take full advantage of a trend's potential, while hedging any challenging to the dominant trends in order to maximize profits and minimize losses. The default edition is designed to operate with daily and intraday data. The expert advisor provides the technical rating of the security of choice and a list of the top technical studies a trader needs to beat the markets. The expert advisor educational provides the answer to the 9 most important technical questions about the security of interest and in specific. 1. What is the technical rating of the security and is it a winner, loser or neutral? 2. What is the long-term forecast? 3. What is the best trading strategy? 4. Which are the nearest support and resistance levels? 5. What is the dominant signal for the security and is there a hedging signal as well? 6. What is the maximum profit loss it might record in the current 1 period? 7. What is the maximum profit loss it might record in the next 100 periods? 8. Is the security potentially inflated or deflated? 9. Which are the recent time support, resistance levels? DomiStock's Technical Rating Systems Strategies. Risk Profile and Strategy-Based Adjusted Scans. In order to apply DomiStock's trading strategies to your analysis and trading, all you need to do is to follow the next two steps. 1. Run the DomiStock Trading Strategies exploration on the securities of your choice. 2. Use one of DomiStock's templates to open the securities that meet DomiStock's strategies criteria. DomiStock's scans will not only look for securities that meet the criteria of the strategies, but will provide a rate from 0% to 100%, according to how many of these criteria are met. Thus, if all criteria are met, the scan will return a value of 100. If half of the criteria are met, this value will be 50. First strategy. Long the deflated winner, short the inflated loser. This strategy is of low to medium risk and looks to long securities that 1. Have an A rating, which means they are winners. 2. Are deflated. 3. Are close to support levels. 4. Have given a positive dominant, or at least positive hedging signal. It also looks to short securities that 1. Have a C rating, which means they are losers. 2. Are inflated. 3. Are testing resistance. 4. Have given a negative dominant, or at least a negative hedging signal. Second strategy. Long the deflated neutral, short the inflated neutral. This strategy is of medium to high risk and looks to long securities that 1. Have a B rating, which means they are neutrals. 2. Are deflated. 3. Are testing or holding important support levels. 4. Have given a positive dominant or hedging signal. It also looks to short securities that 1. Have a B rating, which means they are neutrals. 2. Are inflated. 3. Are testing or failing important resistance levels. 4. Have given a negative dominant or hedging signal. Third strategy. Climb the trend. This strategy is of medium to high risk and looks to long securities that 1. Have an A or B rating, which means they are either winners or neutrals. 2. Have given a positive dominant or at least positive hedging signal. 3. Are not inflated. 4. Are not testing resistance. It also looks to short securities that 1. Have a C or B rating, which means they are either losers or neutrals. 2. Have given a negative dominant or at least negative hedging signal. 3. Are not deflated. 4. Are not testing support. 4. The contrarian, long the loser, short the winner trading strategy. This strategy is of medium to high risk and looks to long securities that 1. Have a C rating, which means they are losers. 2. Were winners recently. 3. Are deflated. 4. Are testing support. 5. Have given a positive dominant or a hedging signal. It also looks to short securities that 1. Have an A rating, which means they are winners. 2. Were losers recently. 3. Are inflated. 4. Are testing resistance. 5. Have given a negative dominant or a hedging signal. Notice how the scan has found several securities that meet the long the deflated winner trading strategies criteria by 75%, which is fair enough. This means that DomiStock found securities with an A rating that, however, are deflated, which turns them to potential trading opportunities. That is because although they are long-term strong, in the short term they appear to be relatively cheap. Let's check the chart of the Standard & Poor's ETF, SPY, by inspecting through the DomiStock's rating system template. On the bottom of the chart we can see the A rating on the ribbon. On the middle window we can see the extreme demand potential price deflation alert. We also see that the nearest support and resistance tool indicates that support is tested. This means that so far 3 out of 4 criteria of this specific strategy are met. Hence SPY, on the 4th of November 2016 appears to be a trading opportunity.